It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, time to dive on into a market that's causing a lot of consternation right now. Yup, it's the equities. You know where to go to follow along with the show. CMEgroup.com/TWIFO, TWIFO/TWIO, TWIO should also work. Both of those get you to our This Week in Futures Options reports. Once you're in that drop down, listeners, you're going to go down 4 slots to equity indexes. Then from there, product family, U.S. Index E-mini. We got to start with the big dog, the S&P. After that, we can go a lot of different places. But Carly, obviously, a lot going on in the equity world right now. We are coming hot off the heels of NVIDIA's earnings, seen by many folks as very much the bellwether for this big AI boom in the market right now. And the good news was that they knocked it out of the park yet again on the earnings front. The bad news is that it wasn't enough for the ever hungry, ever ravenous market. They are crushing NVIDIA. They are crushing the market, even though it seems like maybe we're getting a little bit of a rebound, a little bit of a bounce now. But kind of a wild Thursday yet again, Carly. What is catching your eye out there in the S&P?
Indeed. I mean, I think it's just this is just my speculative opinion, but it just feels like everybody's positioned on the long side of stocks, particularly NVIDIA. And so when you get a beat, but not like a gangbuster beat, you know, it's a disappointment, which is unfortunate. And so I think that's what we're seeing. But my big picture thinking is that this market is rather frothy. It's been trading sideways up here for several months, so it doesn't feel too dangerous. But the reality is, in my opinion, there's a good amount of danger to the downside and not a whole lot of upside potential, in my opinion. I know that that's not the most popular view, but I would say be careful out there if you have any downside exposure, because you know risk comes really fast. When we're in a quiet market like this, you know, it can surprise you pretty quickly. So just be careful.
Certainly can. We saw a lot of people piling into upside in NVIDIA going into the close last night, into their announcement, and it seemed like they were looking good in the first blush of the earnings until they weren't, and they dragged the rest of the market down with them. That said, the Dow has turned green on the day now, so maybe we've seen the worst of the bloodletting, or maybe it's just another head fake bounce, and we're heading right back down. In terms of what's lighting up the tape out here, you have a lot of stuff going up, obviously, in the E-mini. It's another action-packed week out here. Over 3 million contracts, about 3.1 million contracts changing hands. The lion's share of that flying fast and furious in the contract expiring in a few minutes and the contract expiring tomorrow, listeners. So pick your strikes of 0 day, and they are all trading fast and furious right now, especially a day like today where we are whipsawing quite a bit. Interesting stuff. The hunt for yield continues as people continue to find different ways to carve out put bombing in the E-mini, including the par puts out here this week, expiring in 18 days. The 6,000 puts trading 17,000 times on Monday, all opening there. So yet again, the folks love to find a little bit of downside. This time going out a little bit farther, though, 18 days. So could the 6,000 strike become relevant in 18 days? Well, today's sell-off continued, perhaps, but seems like we are mitigating. And then folks hunting for a little bit of interesting upside, a little bit farther out as well. Always interesting to see size trades going up beyond the 12 to 24-hour window, because so much of the paper is lined up these days, including an interesting upside vertical going up on Monday. I guess Monday was the big day for the S&P this week. We saw it was the 69 half, 70 half, so 100 handle vertical went up on Monday, listeners, about 21,000 times. Of course, we're hanging out right now in the S&P. We just recovered a bit. We were hanging out 68 half or so, have rallied to right around 6,900 right now. So this is still out of the money, but you've got 21 days to go. Average price for this was around $40, Carly, 39.75. So would you be nibbling on this to the upside? Would you like this as a little bit of a potential covered call sale with some protection? And what are your thoughts on this 100 handle vertical with about 21 days to go?
Yeah, I think both of the examples you talked about are pretty interesting. I'm just eyeing those 6,000 puts that expire in 18 days. It's a weekly Monday option, and I'm so old school. I stick with the weekly Fridays for almost everything. So it's weird to me to see that much going up on the Mondays. Yeah, these are real interesting trades. Probably not my style, but I can see why anyone would want to participate in them. The reality is they're very low risk, and if they do happen to pay off, it's a big bang for your buck type of trade. But the odds are not great for either, in my opinion.
Interesting to see size trades going up outside of that 24-hour window, Carly. I didn't know that was possible anymore. I didn't know we looked that far ahead in the world of equities. Yeah. Speaking of
I was just gonna say, I think I'm getting too old for this. Like, this is things are changing too quickly.
Who was the guy, not Mel Gibson's character, but the other one in Lethal Weapon, who kept saying, I'm getting too old for this. You're that character now?
Exactly.
Danny Glover's
I think
character.
I am.
You're Danny Glover in the Lethal Weapon. Yes, that's
yes.
All right, let's keep rolling to an index that took the lion's share of the beating today post-NVIDIA. This is, of course, the Nasdaq. At one point, it was off about 2% today. It has recovered somewhat. It's off about 1.25% right now, but obviously things not looking great so far this year for the mega cap tech names, and that is reflected, of course, not just in the S&P, but also in the Nasdaq. Nasdaq having a pretty decent week, 212,000 contracts on the tape. Like most products these days in the equity world, it is very heavily biased towards the 0 day. I mean, again, a day like today where we're selling off 2%, pick your strike. And near the at the money, it's got some decent volume going up on it out there. But Carly, before I dive into some of the flow, a lot of people are fixating on the mega cap tech names and how maybe this is a year of rotation out of them. What are your thoughts on what we're seeing on a blood red day in the Nasdaq?
Sure. So it is very obvious that we are seeing some rotation, and we can see that in the S&P 500 index. Obviously, the index hasn't managed to stay as high as it is because we're seeing money come out of tech and then going into all the other S&P 500 stocks. So it's been interesting to watch. What my take on it is, I feel like people are just seeking somewhere to park their money. I think I've talked about it on the show before. There's so much liquidity in the system after the pandemic. We shot all the bazookas at the money supply, and now we're at this situation where a lot of the typical assets that people have been putting money into are so overvalued, or at least perceived to be overvalued. And I agree with that people are just shopping around to put their money anywhere. And the ironic thing is they want to put it anywhere except for treasuries, which I know I'm old and I know this isn't popular, but treasuries are really not a bad place to be honest. But everybody's ignored them in their portfolios. Everybody's ignored them in their trading accounts. But that might be kind of the sleeper here on the board. So I'm going to say, I think I said it a few minutes ago, but I think in the overall scheme of things, when it comes to tech stocks or the S&P 500 index, I think we've got the potential for a little bit more upside here. If you look at the chart, there's lots of resistance overhead, but the problem is if we start cracking below support in the Nasdaq, my view is 23,850. So let's say we get below 23,850, I think there's really nothing stopping it until we get much, much lower. The same trend line that saved us in April of 2025 comes in at about 19,000. So we really don't want to see prices crack below 23,850.
That would certainly be interesting. Speaking of interesting, Carly, I think it's very interesting that the largest trade in the Nasdaq this week, you're talking about putting your money in treasuries. That's a nice, safe place to get some yield. What are your thoughts on doing this for yield, perhaps, instead? Maybe we've gone a little bit too far in the hunt for yield. I was talking about selling the roughly 850 handle out of the money puts in the S&P a few minutes ago. What about going the other way? What about selling? We're hanging out not that far north of 25,000 in the Nasdaq, about selling roughly a 700, 650 handle out of the money, $10 call vertical. That's what's going up today in the Nasdaq for size. On a day when the Nasdaq is selling off roughly 2%, someone's putting up the 25,710. So yes, a $10 wide vertical, about 16,000 times as we speak, Carly. Have you gotten that desperate for yield?
No, I haven't gotten to that point yet. So, I mean, these are really interesting. Obviously, somebody knows something that I don't, because I'm not understanding it. And I will say, the brokerage and anyone that's benefiting from transaction fees on stuff like that is real winner.
Yeah, that's what we call on the network a love your broker trade. So maybe that's a DeCarley customer. Maybe that's going up over there as we speak, Carly. Yeah. You didn't see it because
Give
you're
me a
busy on the
call.
show. Yeah, that's the kind of client I think most brokers would love. So there you go, listeners. All sorts of outlandish hunts for yield on a wild day and indeed a wild week in the equities.